Hello and welcome to this week's Trading the Trend on Wednesday, the 28th of February 2024. We went long the US dollar against the Canadian dollar on the 14th of February, as you can see here, I believe on the 14th of February. And we basically are in profit on this trade, or would have been in profit on this trade had we not been stopped out, because we basically raised our stop loss level last week to be just below the last reaction low here, where you have a low which is lower than the one to its left and to its right on the daily candlestick chart. And intraday would have been stopped out on Thursday of last week. But if you haven't been stopped out on that trade, it is still looking bullish, and I would probably run with it if we hadn't been stopped out on that one with a small loss. What we did last week then is to go long the NASDAQ 100. And as you can see here, we did it at a really, really good level. We went in at 17,485, so just down here. And we've had a lovely run up. And since we're seeing negative divergence now, basically where you have a new high being formed compared to the high seen in mid-February, but we have seen a lower high on the relative strength index here, not confirming this new up move. That points towards a potential downside momentum being seen against the trend over the next few days. And therefore, I'd probably be quite happy to cash in my profits on this trade now ahead of tomorrow's PCE inflation data out from the US. So this trade here can be cashed in with a nice profit of around 400 points or so. And this brings me to this week's Trading the Trend. And what I would like to do is to go long the VIX index, because I would expect it to rally and spike higher again if US equity markets were to indeed correct lower on the back of that bearish divergence that we're seeing on a lot of indices. So this week's Trading the Trend is to go long the VIX index with a stop loss below the December low at around 1370 and an upside target of around 1650.